Hello, chart watchers, and welcome to this Wednesday, May 29th, 2019 Market Watchers Live Show with your hosts, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, let's take a look at the action. We are seeing a lot more selling in the market today. The Dow Jones Industrial Average currently down 385 points. The S&P 500 down 35. The NASDAQ down nearly 100 now, down 97 and change. And the Russell 2000 losing 1,500 support, down 22 points to 1481. 10-year Treasury yield for really the last 5 or 6 days, it's been a steady decline. We are now down to 2.21% on the yield. That is down another 5.5 basis points today. Volatility index, as you might suspect, on the rise, up 8%. Still not clearing the highs that we had back earlier in May, but we definitely have fear rising, as evidenced by that VIX. The XLE energy tumbling again, crude oil prices under pressure, and energy continues to fall. But we were up over $68, almost $69 on the XLE just a few weeks ago, now down below 60. XLV healthcare also having a push to the downside. Part of that, Johnson & Johnson, we'll talk about in a minute. Other areas of the market that are really struggling today, footwear. Footwear stocks, you can see, down 58 points to 1433. That's about 4% on the day. Clothing and accessories also continuing their month-long slide, as are the apparel retailers getting hit. The pharmacy stocks, as I mentioned, in that healthcare space, Johnson & Johnson getting slammed today. They've got trials going on, lawsuits being filed by state and federal governments regarding the opioid-related deaths, and a lot of folks getting out ahead of any possible settlement or some kind of resolution there. Nike in that footwear space falling. You can see we had a breakdown yesterday, technically on the close, and the selling has escalated today. And then finally, Abercrombie and Fitch, not a great earnings report, already in a weak area of the market. And today lowering their outlook for the next quarter, in addition to providing some, what I thought wasn't too bad news in terms of their earnings and revenues. They did beat on their top line, and I saw mixed accounts on their bottom line. Some saying they beat, some saying they came up short. But I think the big problem was their forecast going forward. They lowered their guidance. And, of course, that area of the market, Erin, has been getting just slammed lately.
Absolutely. I think it's because I haven't been out shopping lately.
That's it. We uncovered the weakness in the market.
Or I have to say, maybe it's because my daughters are poor right now and can't afford to buy all those clothes they like to buy.
Well, that now we're talking about you and your daughter, so now we've got three different reasons.
Exactly.
For the selling. Anyhow, I do want to bring in our special guest, Larry Williams. So excited to have Larry joining the show today. Larry, how are you doing today?
I'm doing great, thank you. Enjoying the decline in the energy markets and stocks. So happy camper today.
Well, I am really looking forward to your presentation. And for those of you out there that don't know Larry, let me just tell you something. First of all, if you've seen the Williams percent R momentum indicator that is here at StockCharts, Larry was the creator of that indicator. He's written a dozen or so books, mostly on stocks and commodities. And there are some very interesting facts about Larry I want to share before we get into the show today. Being a CPA, one thing that really stood out to me is I noticed that he sponsored Initiative 86, which made Montana the first state to index tax brackets for inflation, which I thought, again, from my perspective, was pretty fascinating. Some of you may recognize his daughter, one of his children, actress Michelle Williams, who has won a Golden Globe Award, won it for her role in Brokeback Mountain, nominated for 4 Academy Awards and a Tony Award. Larry, you were on the all-state football team in Montana, one of the founders of the rock and roll marathons that have raised more than $300 million for charities around the globe. You've created a number of different market indicators, the Williams percent R just being one of those. And in what has to be the biggest piece of trivia, you won a trading competition back in 1987, and your daughter Michelle came along 10 years later and won the exact same competition. And I want to say you turned, $10,000? This was real money. You turned
real money. Yeah, it was.
To 1.1 million. Is that correct?
Yeah, the equity high was 2.2 million, and then I had a little drawdown in it, but that was quite a trading year in 1987 for me.
Yeah, were you on? I'm assuming you were on the right side of that crash in 1987.
No, at the end, the $2.2 million was I got short bonds, and they gapped up, and we had a pretty good sized loss that drew the account down to about 750,000. Then by year end, I traded that back to 1.1 million.
Wow. Okay.
I know, seriously.
When I saw 1987, I was like, oh, maybe you caught that crash on the right side, but that makes the story even more fascinating that you were on the wrong side of the crash and still managed to do what you did. But very fascinating. I know everyone's really looking forward to your presentation. So if you'll stick around with us for about 15 minutes, we're going to bring you back. And I think everyone's going to really enjoy what you have to say.
Greatly look forward to it.
All right, here's our upcoming schedule. Dan Russo from Chaikin Analytics will be with us tomorrow. And then on Friday, Tom's going to be giving you the June seasonality report. Rick Ben Sr. will be with us on Wednesday of next week. And then Jesse Felder will be with us on Thursday. Today's agenda, of course, Roman is in there too. I just saw him poke out there. Larry Williams will start off after our news and headlines. 10 and 10, our very first symbol will be ARQL, A-R-Q-L. And then we are going to finish with the segment of Turning Point. All right, Tom, technical news and headlines. Take it away.
All right, sounds good. Well, we didn't have any economic reports, so I'm just going to jump right into the 10-year Treasury yield and show you the decline. Last 5 or 6 days, this has been a big drop, 2.44% all the way down to 2.21%. It could certainly be a signal about the prospects for economic growth ahead or the lack thereof. It also could be a sign that with the dollar continuing to rise, putting downward pressure on commodities, it could be a signal that maybe the bond market's somewhat concerned about deflation. But no matter which way you look at it, the numbers speak for themselves. You can see a big breakdown here. We had tried to hold this 2.36% yield support, did not do it. The 10-year Treasury yield now down 2.21%. There were a number of earnings reports that came out last night and this morning. The first and perhaps most notable, especially if you like to trade software stocks, was Workday. Workday came out. They did beat expectations, 43 cents versus 41. Heiko Corp beat. Bank of Montreal this morning came out and beat. Capri Holdings beat. Canada Goose Holdings beat. We're getting all these earnings that are coming in beating, but unfortunately, the market has not held up particularly well. And there you can see the companies that did report already. And then after the bell, we got a couple big companies that have been performing pretty well in terms of relative strength. Viva Systems, VEEV, another software company coming out with their earnings after the bell. They've had some really nice reactions to their earnings results in recent past. So that'll be one certainly to keep an eye on. Palo Alto Networks, which all of a sudden has lost about, 16, 17% in the last few weeks. This was a leading stock. So it'll be interesting to see what they have to say going forward because of the recent sell-off. And then Keysight Technologies, KEYS, was on fire up until the end of April. And that stock has dropped probably more than 20%, maybe 25% just in the past month or so. And they'll be reporting after the bell. So a lot of interesting reports coming up. But I'm going to start taking a look at a stock that reported this morning, and this is Abercrombie and Fitch. So let's pull this one up, and you can see the huge gap down. The stock right now at under $19. It is down almost 25%. I mean, think about that. 1/4 of the company's market value is gone in one day, or less than one day, based on their earnings report. Now, we talk about this a lot on the show, but look at what apparel retailers have been doing relative to the S&P 500. This is a group that has been leading the S&P to the downside. There's obviously a lot of ties with China. I think the trade war is spooking a lot of traders in this area, and you just cannot afford to lower your guidance or to miss estimates if you're in a group that's underperforming, and that is what happened this morning to A&F, Abercrombie and Fitch. So this is a stock that now is looking at support maybe back at that November low, down around $15, $16. I'm not seeing a whole lot that's going to hold it up until we get to that area. So this is a stock that obviously not looking very good. A couple of other stocks. I actually did want to pull up WDAY because we did get positive reaction or slight positive reaction after hours last night. But you can see with the overall market turning weak, we gapped down. I still believe this is a solid looking chart longer term. And when we go down and look at the relative strength, you can see that this is quite opposite the apparel retail group we just looked at. Software has been one of the leading groups of the S&P 500. So when you invest in software, you're investing in an area of the market where we've been seeing money rotating in as opposed to out. And that has been helping a lot of the stocks in that area. And I suspect it will help Workday. Workday did beat on the top line. They beat on the bottom line. And you can see, even though it is having a negative reaction, the overall group, the software group, continues to trade near a 52-week and all-time relative high to the S&P 500. So I think outside of maybe a little short-term weakness is a stock I certainly keep an eye on. HEI, this is Heiko Corp. We did get the gap up with earnings. They beat on their bottom line, actually pretty wide margin, 60 cents versus 49 cents. Yesterday, a lot of volume coming in, didn't really do much, sold off end of the day, but the earnings were strong. It is in the aerospace group, and it has been one of the top performers in aerospace even before the earnings came out. So we could see money rotating into this stock within its, amongst its peers before the earnings came out. And now with solid earnings backing it up, this is a stock I would certainly keep on a watch list as I go forward as well. Nike and Johnson & Johnson are the two laggards on the Dow. And you can see Nike making a breakdown yesterday, closing at a multi-month low. Volume was picking up. It's already traded 5 million shares today. We're not even at the halfway point. So this is a breakdown that is occurring on heavy volume. Not a good sign for Nike, and definitely not good for the footwear stocks, which you can see now are breaking down and trading at a multi-month low as well. Relative to the S&P 500, 2 or 3 months ago, footwear was up near the top. But you can see over the past 3 months, a lot of money rotating away from footwear stocks. So I don't like this breakdown on Nike. And then the final one, Johnson & Johnson, huge breakdown here, looking very similar to the move that we saw down back in December when we had issues in the market, J&J getting hit by all of these lawsuits being filed regarding the opioid-related deaths in the country. And so you can see big breakdowns technically. And once again, like Nike, volume accelerating, already 8.4 million shares, on a pace to do more than 15 million shares, maybe close to 20 million shares. And when you look back, that is a very hefty number of shares that are being traded. So big breakdown on heavy volume, not a good sign. All right, Erin, I'm going to turn it over to you. I know you got upgrades, downgrades. What do you got today?
All righty, let's look. Actually, it was interesting on the lists that I go to on briefing.com. There were quite a few more downgrades today than there were upgrades. Just thought that was rather interesting. All right, but we're going to start with Hartford Financial. HIG was upgraded by Goldman today from a neutral to a buy. It's been a really nice rising trend channel, and it's getting ready to come down here and test it once again. We've got the PMO sell signal, so that is a little bit discouraging. But I noticed that the scooter, our StockCharts technical rank, is now in that hot zone. So there is some internal strength going on there in comparison to its peers. OBV, it's still rising. Looks like we've managed to drop below the rising bottoms here on the OBV, but we're still in that rising trend channel. And on the upgrade, I suspect we could continue in this rising trend. Rockwell Automation, was upgraded today by Gabelli and Company from a hold to a buy. Just for FYI, none of the upgrades and downgrades today had price targets on them, so that's why I'm not reading any off. All right, so right now I'm looking at the bottom here back in October is now being challenged. Of course, this is really the main area of support that's all the way down here at 140. We're getting to a point where we really want to see that PMO start to turn up. This could be a turning point for Rockwell. We could see that bounce and maybe get a pivot, but the PMO is really not pointing in that direction. And then with a 50 to 100-day EMA negative crossover, that's a long-term trend model sell signal for decision points. So watch for that bounce. I think this could be a really an interesting play, but as Tom always says, I would put my stop pretty tight here just because we're at that low back here from October. YY Incorporated, Nomura upgraded it today from a neutral to a buy. I'm liking the way this one looks. I have to say, not thrilled with the OBV, but come on now, it's been in a very steep declining trend. Finally got kind of out of that. Looks like it wants to make that turn to the upside. It's struggling right here at 70, but you can see there was a gap back here in about, looks like between May 11th, 12th, somewhere in there. And I would be looking for that gap to be covered at this point. The overhead resistance, it looks like we've just barely gotten above it if you look in the thumbnail, but I really like the PMO turning up at this point. Scooter, kind of mediocre on this one. Costco, let's move to some downgrades. Costco was downgraded today by Gordon Haskett from an accumulate to a hold. Wow, I hope not too many of their customers were holding today with this over 2 3/4% drop. It's really an important thing to note. It's been in a nice rising trend, as have most stocks out of the December lows. This is a pretty critical drop here out of that rising trend. That is bothersome. And, you know, we've got the downgrade here. Look at what the PMO has done. It's sort of whipsawed here in a bear kiss, you know, faked out some of the bulls maybe. The next area of support, though, is pretty close right here at that low from May. So we might be able to find some support there, but on the downgrade, it doesn't look like an opportunity at this point. Atlassian Team was downgraded today by BTIG Research, and it was moved from a buy to a neutral. You know, the PMO is topping out. Looks like it's going to give us a sell signal in somewhat overbought territory here. But I like the OBV is moving the right direction, or it has been. And look at the scooter. This has been really one of the, you know, the ones that have been moving quite well in that software space, Atlassian. And it's showing right here how it's the relative strength at this point, as far as the scooter is concerned, been in that hot zone most of the time for the whole year. This is really a short-term bump in the road, possibly. We've got a rising wedge, which is a bearish pattern. We're seeing the drop below that, sitting on the 20-day EMA. So you certainly could see maybe a turn there, but I would be looking at this support area back here from April. I'd wait for it to get down there to that 50-day EMA, but that could be a possible opportunity in the making. But, you know, watch out. We've got the PMO going the wrong direction. Total System Services today was downgraded by 2 agencies. Let's see, both of them. Let's see, Cowen and Credit Suisse were the 2 agencies, and they both moved Total System Services from outperform to market perform or neutral. So, you know, we've had this giant move on this company. We've got the big old gap back down here. Looks like we may have hit that top, though, and we're heading back down toward that breakout point, toward that gap support. PMO is obviously terribly overbought right now, but, you know, when you get a move like this, moving from $100 all the way up to $122 in a couple days, you have to, you know, expect that sort of thing. We're now in the hot zone here for Total Systems, but on a downgrade with 2 companies, they are listing it as neutral or a hold. I'm looking for it to fall back down here to that support level, but I think that could be pretty significant support, pretty strong, and we could see the bounce off of there. And that is it for upgrades and downgrades. Here are the lists of which ones we looked at. I'll have this up in the Market Watchers Live recap later on this evening. But now it is time to bring our special guest in. We've already given you so many introductions, Larry. It's just absolutely a pleasure to have you on the show. I've studied your work, of course, for the CMT tests, and really very interesting work, and looking forward to seeing what you have to say today.
Well, thank you very much for having me. It's always an honor to still be trading and still be here. So thank you very much for that.
Mm-hmm.
I've really been looking a lot at the bond market and the stock market the last few days. I'd really like to make some comments about that. And we got some videos we can go over. And if people have questions at any time, they can obviously ask questions for us as well.
Yep, I'm going to be monitoring the chat room for those questions, and I'll try and pepper them in, or Tom will, as we go along.
Great.
Yeah, just make sure you share your screen there, Larry.
Yep.
There we go.
Grab it.
So we should be seeing my screen now.
Not yet.
Seen it yet.
Let's try another button. How about that button? Did that work?
That's it. You're
great. Well, one thing where I think I'm different than a lot of traders, I'm a conditional trader. I look for big conditions in the market that are usually associated with major market highs and lows. So they can be fundamental and they can be technical. And then I bring in short-term timing tools. And the conditions that I love in the bond market are what the commercials are doing, the commitment to trader data. And I also have a valuation model. You can see that on the bottom pane of the chart. So we know bonds were undervalued at this level, and they were undervalued over here just before this recent big rally. And they've just currently gone into the overvalued areas. They were back here, they were over here, they were in here. So I think that we're setting up a selling opportunity in bonds, especially when I look at the commercials. You can see they've been heavy sellers in bonds. They were here, and they called the top back here and this top, and they got a great record of doing the right thing in the marketplace. I've been along bonds. I got out yesterday at a target, and I think we can go a little higher, but we're in the area where I want to be very careful that I think the next major move in the bond market is to the downside. We can look at my next chart. This is the one that really intrigues me the most. The green line is a small speculators. These are the average mom and pop traders in the marketplace. They're currently the most bullish they've ever been. And they have a great record. I've marked off when they have been very bullish in the past. You can see what's happened. Prices have declined. We've been in the area of a significant mark up top. So to see them this crazy bullish, and they really are, that's not a good sign. The small speculators, you can see at significant market lows, they weren't bullish at all. A great buying opportunity over here. One of the best opportunities in 2013 right here. The small speculators were not buying at all. They were net short, in fact. And I see the same thing over here. That's what sets up really significant bottoms when the public, small speculators, if you will, are just not bullish or very bearish, or in this case, they're extremely bullish in the market. And that's not good news to see that many people that bullish on the bond market. So that to me is the condition. That's the setup. So we can look and see that we have an overvaluation, that we just got in the overvalued area in bonds. And the commercials, the big guys in the marketplaces, the banks, foreign governments, institutions, their view of the market is going to go down because they have a large hedging short position on, suggests to me that we're getting close to a pretty good top on the bond market. In terms of more specific, this was my trend line target. We had a nice trend line coming up here from the first of this year into March, and we did hit that trend line. That's where we are today. In fact, we're kind of fighting at that trend line. I think that's a good place to get out, not get short yet. So I still would like to see a trend change in the market. I do a lot of work forecasting based on intermarket relationships. And it's pretty interesting what's going on now. Gold has been a pretty good forecaster of the bond market. And it says just about now we start to go down. This model's been bullish for a long time, but it started to roll over, which also suggests to me that we should start to see bonds come to the downside. I'm not short yet, though. That's the big point. I still want to see this market break a little bit, rally, and then on that rally back, I'd look to be a seller. That's the way I'm going to handle the trade in the bond market. But clearly, my vision of this market is we want to start looking and take sell signals in the bond market. There's a cycle forecast too. I use a software called Timing Solutions that does a very nice job of giving cycle forecasts. And this is the current cycle forecast for the bonds, which also says pretty much the same thing. Now, don't read this wrong. Just because we have a big down move from now until late July doesn't mean it's going to be a big down move. It just means this is selling area, buying area, selling area. If people get a real bad impression of cycles go from low to high. That doesn't necessarily the market will go from low to high. As you can see here, it didn't rally much. It was a buying area and a selling area. That's what cycles do. They don't tell us the magnitude. So don't get too carried away with the size of this decline or the next projected rally. But no, we're in the area of selling area, buying area. As you can see, the last buying areas were here, here, back over here, and over here. So when I look at that, I see also, gosh, we've got cycles. We have a valuation model. We have the small speculators wildly bullish here. And the commercials on the other side of that market, they've been sellers of this market. They're net short here. And that tells me that I definitely want to look for those sell signals in the bond market. I don't know if we've got any questions that come in, or I can continue talking.
Well, I have a question for you, Larry.
Great.
You know, you're talking obviously about the U.S. market. Do you look at bonds in foreign countries at all?
I don't know. My main interest is trading U.S. markets. I do some work on other markets, and interest rates in America have a huge impact on what happens in other countries. A good case, we have a lot of followers in Japan. And what happens to the Nikkei and some major stocks in Japan are highly correlated to interest rates in the U.S. So I look at it that way. But, you know, as a trader, I'm trading the biggest markets in the world. They're in America. I'm not going to go to a market I don't understand or have good data on. If I can't make money trading bonds and stocks in America, why would I want to go to Mexico or Brazil or India? It doesn't make any sense.
Right. And you've got all the, you know, government issues, you know, geopolitical concerns and things that are very difficult to get a grasp of. I completely agree with you.
Well, and as a CPA, I mean, you can recognize that in America, we may have some dodgy accounting occasionally, but I've been in these foreign countries and lectured there. I know a lot of traders there, and that's their big nemesis, is they have no idea if they can trust numbers in China. They're made up just writing off the wall sometimes. And here there are repercussions when you fudge your balance sheets. In other countries, there may or may not be. So the data here, it may be played with a little bit, but it's certainly better data to work with here than any other place in the world.
No doubt, no doubt. Any other questions, Erin?
We did have one. You mentioned that you sold your bonds. Are you anticipating an increase in interest rates?
No, I'm expecting a decline in the bond market. So on a short to intermediate term basis, there may be no change in interest rates, but we could still have a pretty big dip in the bond market. You know, it's worth $10,000, $15,000 a contract trading, maybe $5,000 to $7,000 drop, at least 7 points in the bond market, I think could happen. Now, what's driving the bond market right now is the decline in stock prices. Once the decline in stock prices starts to abate, that's when we want to look for the sell signal in bonds to take place. These have been so reciprocal of one another. Bonds rally, stocks decline, and that's what's driving bond prices here. But I think it tells us we're close to a high. As I said, I'm not short yet in this market. You know, I'm looking, but I need to see a trend change, because that's where technical analysis helps. We know we're in the area of a significant high. We hit the red trend line that we saw back a couple of charts. So we know we've got this, we hit today. We've pretty got a good sell setup going on here. It's just a question now of, if I want to sell short, where do I do it? I like to see the market stop for a little bit, falter a little bit. I don't want to stand in front of a freight train, and there's still a freight train to the upside. It's just I'm on the sidelines, a nice safe position, looking for selling opportunity, which I don't see yet, but I know one is coming in this market.
Okay, and then kind of a follow-up, if the Fed does lower its rates sometime this year, of course, the question is, how likely do you see this happening? But what would happen to bond prices or TLT, in your opinion?
Well, if they lower their rates, we're going to see a further rally in the bond market. Certainly the best The best guy I've seen on future rates in the bond market is Van Hoisington, a large bond fund in Austin, Texas. And they continue saying that rates will stabilize, be about where they are. And given this big rally we've seen in the bond market, which is lower rates, I think we'll probably stay in the area where we are. I would be surprised if we see much of an increase or decrease coming from the Fed. We'll have a little bit more data on that when we get the unemployment numbers, because I think the Fed really monitors those carefully in terms of how they perceive interest rates. That and inflation are their driving forces. So I'll look at that on a longer term basis. But as a trader, while we're at 152, could we pull back to 148? Yeah, what's that worth for me? $10,000 a contract, $8,000 a contract. That's the trade I'm looking for.
Right. And then also, do you track high yield or junk bond markets?
No, I get confused enough with just the 30-year bond market. You know, there's all these things you can track and follow and trade, and I really like to keep it simple and stay with the big contract where the big volume, big open interest is.
All right. There's a bunch of other questions, but I'm thinking maybe you should go forward because I think some of them might get answered as we go.
Let's give it a try.
I have one other question for you, Larry.
Please.
You've obviously been talking about bonds, and it's been a safe haven. A lot of folks going in there. So one question I have, and I alluded to this at the beginning of the show, and I've talked about it here on Market Watchers Live quite a bit. But when we see yields dropping as precipitously as we've seen them, there's a couple of different possible reasons, and one of which obviously would be that the bond market is beginning to perceive economic weakness ahead, or maybe not as much economic strength as was forecast. But another thing that I've talked about a little bit on here, and I'd like to get your thoughts, is that with the dollar strengthening the way it has, really off of the bottom back in 2011, we've been in an uptrend on the dollar, and that's been keeping pressure on commodity prices and keeping inflation very, very low. Do you think the movement down in the in interest rates and the movement up in bond prices is reflecting the fact that maybe bond traders are fearing deflation a little bit more, with rates or with the dollar increasing and commodity prices coming down? Do you think deflation is a concern?
It could be. I think what may be the tipping point here is the massive rally that we've seen in the grain markets the last week or 2 weeks, notably led by corn. And it looks like cattle's ready for a pretty big move to the upside as well. So we may see higher prices, which of course is the opposite of what we've been seeing. And that may be at my longer term view of the dollar index, is that we're real close to a significant high on the dollar index as well. I'm not short that market, but I'm certainly looking at it. So I think in terms of cycles and setups and the commitment to trader report, we're not far from a pretty important top in that market as well, which may, of course, affect the bond market. But the real driving force is what we call flight to quality here. When stocks are down hard, people rush in and buy bonds. And that's been the driving force here. Typically, these moves in the bond market last 7 to 10 days. Well, we've been in this up move, this last little up move here, about 7 days. So we've got another day or two left, and then we're going to have a pullback in here. Okay.
Do you actively trade Forex?
I don't trade Forex, no. The commissions are too high there. I can trade the exact same things. I can take the Globex markets for, $3 round trip, and I don't have to pay pips, and I get better fills. So I'm not a Forex trader. I'm going to trade the major markets where they are regulated.
Okay, sounds good. I'll let you get back to your presentation.
Okay, well, let's go take a look at forecast for the Dow Jones 30. Again, the significant point is not that we're going to have a straight down crash to July 12th, but these are the areas when we expect rallies, and these are the areas when we expect declines. We've been looking for this decline, as I publish a weekly commentary called Larry TV. You can go Google it. And we've been bearish in the market. Unfortunately, it's come down as we anticipated that it would. My view is it'll continue down until about the 12th of June. I'm not going to call it the exact day, but somewhere around that end of the first week in June, the first part of the next week. Then we start to rally back up. And so there's a good buying opportunity coming for traders around the 10th, 11th of June. And the next selling point around July 20th, something like that. Then we move, and I think this is the next big move coming up around the end of September. I think we're going to have a rip-roaring move back to the upside of this market. So traders, I'm short the S&Ps, and I'd like to see them break some more cover. But I know by about the 12th of June, if I haven't covered my short yet, I've got to think about getting out of that and looking for a rally in this market up until about the middle of July. Then after that, around the 1st of September, as we get closer, we'll have a better idea where the cycles are. But I think we're going to start a pretty good up move about that time of the year in the Dow Jones Industrial, and of course in the S&Ps as well. Of course, everybody always wants a trade. So I brought a trade this has been a humdinger. One of the ways I look at the market that's unique, I think, for other people, I look at the trading days left in the month. The reason I do this is some months can have 23 trading days, some might 19 trading days if it's a leap year in February. So to normalize all these days to see what end of the month influence is in stock prices, I go back to the trading days left, and this is a phenomenal trade in June. Had you sold on the 5th or 6th day left in June in the last 20 years, that trade has always been successful as a short-term trade. So what do you mean by short-term trade? I'm going to exit this on the first profitable opening after being in the trade a day or so. I'm going to use a stop of $2,000 because this is the S&P minis and it's a big market. But I've been taking this trade now for maybe 5-6 years. I first discovered it after a trip to Peru years ago. And there's a very strong seasonal opportunity for the S&Ps to start to go down with 5 or 6 trading days. Remember, that's trading days left. This is not the 5th of June. This is trading days left. So you have to count back in June. And with 5 or 6 trading days left in the month, look at all the green numbers here. Some have only been successful 95% of the time, right? But clearly we see there's a real bias here. So that's the next really sweet spot seasonal trade that I'm looking for coming up at the end of June. I'll go back to the forecast there. And again, in terms of where we are on a very short-term basis, I think we're going to dip down to about 2,700 in the S&Ps. Hopefully we'll go there. If we do, that's where I'm going to cover my short position and move to the sidelines. That's kind of how I see this, that we're close to a peak in the bond market. Stocks can go a little lower, but we want to be prepared after we enter the first week of June to look for a bottom in this market.
All right, let's see. I have another question for you. If bonds are going down and equities are also going to go down, how do you interpret that?
Well, I don't know if they'll both go down at the same time. I would think that as we start to get into that early June buy signal in the S&P, that's when we'd start to see bonds start to go back the other direction. They can, and they have in the past, often both moved up and down at the same time. So you always have to be prepared for that. Notice they ran up into May, both markets were strong. But I think what the cycles are telling us is, expecting the low around June 12th. So maybe we're going to top out in the bond market somewhere in that first week of June. That's the insight that I have from that relationship.
Okay, let's see. Next up. Okay, so if for shorting, let's see, where is that question? They wanted to know, yes. So what vehicle are you using when you short TFT?
When I short the stock market?
TFT. So that would be which one?
Well, I'm a commodity trader, so I'm shorting the bond contract, the 30-year bonds. Now, there are some ETFs you can short. I think the big one is, I forget the symbol because I don't trade them. I'm a future guy. I get more bang for my buck trading futures than I do trading stocks, which is an interesting aside. You mentioned when I won the Robbins World Cup Trading Championships. If you look at the trading championships, you can trade stocks in those, you can trade Forex, you can trade options, you can trade futures. And really interesting is year after year, the largest gains come from future traders. they don't come from Forex traders or option traders or stock traders. These guys and gals trading real time, real money, have larger percentage gains in the future market. So to me, that says, wow, that's a great lesson about where the best opportunities are. Let the marketplace speak. And it's clearly said that if you're a short-term trader, your chances of making substantial gains are greater trading futures than anything else.
All right. You showed forecasts here for the Dow. What is your forecast right now for the S&P? Somebody's asking about 2,200.
Yeah, sure. 2,200. 2,700. Yeah. Well, we had a. I do my weekly market commentary, and we had a typographical error, and I think we put in 2,200 as a target. My actual target, as I said, is about 2,700. I think we should go down there. My wife would like to see it go down further, but I think about 2,700 is if we can get there. I don't know if we will or not, but if we do, I've been short this market for some time, and I'll move to the sidelines there. And then we'll see what happens after that. But I think we can dip lower. That would be a pretty good decline in this market, then base around, then start to get that move that we see that we should get around June 12th, somewhere in this time period over here. If I can get my pointer on, yeah, back over here. As we get into that low point, I want to cover my shorts. I think what's driving this market and what's really critical, you'd mentioned on balance volume earlier, and I know you've got a lot of experience with Erin. It's been weak in here, and even more significantly is the advanced decline line, which has been a great measure of internal market strength, went to a new low today. It took out the lows that we saw in May. So that's also telling us there's internal weakness in this market, which clearly identifies, to me, the trend of this thing is still to the downside. And I'm looking for that cycle low point. And then I'll look to see if we can't get some divergences between volume and price, the advanced decline line.
Okay, let's see. Where does the red cycle chart come from? This one you're looking at, the red. Where do you get the information?
Sure. I developed this myself. As I use a timing a software service called Timing Solutions. It's a wonderful cycle, allows you to run all sorts of cycles. It's complex and it doesn't automatically do it. You've got to work out which ones you think are working, and there's a lot of work to create one of these. This chart probably took 3 or 4 hours to get it to where I think it's going to be accurate. But I haven't found any other software that allows me to do cycle work as well as Timing Solutions does. And it's been a pretty good harbinger of what's going to take place in terms of time. Again, the magnitude, and that's where people get messed up with cycles. Cycles are not about magnitude. They measure time, distance from this point to that point to the next point. They don't measure the magnitude of the move. The magnitude of the move comes from the given fundamentals of the day. And I think that's what's significant. So yeah, we've got a low coming up in June. It could be a start of a brand new bull market if, when we get there, there's really bullish data. I really want to combine all this stuff. In terms of a longer term view, clearly none of the work I've done with cycles has a great job of calling major stock market highs and lows. Helpful, but the best thing I found, what really starts bear markets, are recessions. And if you have an indicator that is good at alerting us in advance to a recession, that is a wonderful indicator to give market buy and sell signals. I'm convinced that as recessions begin, stocks go down. Until then, we're in that perpetual upward drift.
Yeah, I've got a couple of questions for you, Larry. You've talked about the Dow and you've talked about the S&P 500, but you haven't talked about the NASDAQ or the small cap Russell 2000. Do you follow those two and do you trade those?
I probably should do that, but I'm just an old man. It's hard to teach an old dog new tricks. I've been trading since 1962, and the S&Ps, I started trading them the first day they started trading, and I've done okay with that market. And I know the NASDAQ and the triple Qs are more volatile, but there's only so many items to trade, and I probably should wander over there. I used to trade the Kansas City value line, which is the most active, the wildest of the stock indexes when they first started trading. I don't. They move together. You look at the correlation studies I've done on them; they're 99%. If one goes up, the other's going to go up. I think you might have a little more volume in the S&P, a little more data on it. We have the S&P 500. I can go way back into the 1950s to do data mining if I want to do that. But yeah, clearly great trading opportunity. It's a young man's game. I'm an old man, so I just haven't messed around with it. No reason not to. But it applies to the same rules of all the rest of these things that we speculate with.
All right. Well, I've got a couple other charts I'd like for you to take a look at, but I don't want to interrupt your presentation. Do you have other slides that you wanted to show?
No, No, that's probably good for now. I probably have a dollar index. I could show that if I can get my dollar index forecast over here. Let's see if I can pull that up for us.
Okay.
That's kind of interesting since we talked about the dollar. I'm going to try to bring this slide on over. And see if, okay, can you see that?
No, not. I'm still seeing your cycle forecast for the Dow Jones.
Okay, I don't know how to get that on there. All of these markets we've been talking about have been really driven upward by momentum. The momentum of these markets have been up. The dollar index today, though, has not made a new high. If you want to bring the dollar index chart on, you guys are going to have it probably showing better than I can show it. I can show you what's going on in that market. This is really significant here.
Just bring up the UUP.
Yeah,
Okay. So here is the chart of the UUP.
There's the dollar index. And notice that, oh, you're using those candlestick charts. Oh, my gosh.
Is that good or bad?
If you make money with them, it's great. If you don't, it isn't good. I'm such an old school guy. I'm still using regular open, high, low, close charts because there's less confusion to look at. It doesn't matter. But the nice thing about what you guys have, you can change those to open, high, low, close just like that in a heartbeat, right? That's really nice.
Yeah.
So notice that, stocks have made a lower low today. Bonds have made a higher high today. And they've been, the dollar index and bonds have kind of followed. We haven't made a higher high in the dollar index. In fact, we've rallied back into that same area where we've been about 3 times now. So a very short-term trend line coming right off the lowest low of the last 3 days coming up here. We penetrate that, it would suggest to me this market is going to move back to the downside. It looks like we could be, to me, in the area of a high based on some cycle studies that I do. You can look at some measures of accumulation in this market as well. And I think there's a nice short-term trading opportunity that if tomorrow we were to take out today's low, we're going to be pretty close to a sell signal in this market. That would certainly be a short-term trend change.
Okay. Well, the reason I asked you about the Russell 2000 earlier, I'll bring up this chart using the seasonality tool here at StockCharts. You can compare one index against another index and then scroll back a number of years. So I can go back 20 years and you can see as we go into June, over the last 20 years, the Russell 2000 has outperformed the S&P 500 84% of Junes, and to the tune of an average of 1.6%. So this is the best month of relative performance, at least over the last 2 decades. This has been the best month of relative performance for small caps. And when I pulled up the index, the relative index of the Russell 2000 versus the S&P 500, we've been declining for almost a year now. And over the last 5 years, we really haven't been below this level much. And I could stretch this chart out. We could go back and look 10 years. And, for the most part, when you go back and you look, when we get to this level, this is about an area where we've started to see the Russell 2000 small caps outperform. And when we go to seasonality, it typically happens during the month of June. And so that was one of the reasons that led me to that question about whether or not.
That's great. And follow up on that, Tom, if we look at that, I know we've got that seasonal sell signal in the S&P coming, the 6th trading day left of June, right? Yep. Which tells me I don't want to take it on the Russell. because it's comparatively stronger in June. So
Yeah.
I know which one of the vehicles I want to focus my attention on, right? See that?
Yep. But if it doesn't work, I don't mention it again on a future show, please.
That's the art of trading, is sometimes this stuff does work and sometimes it doesn't. And even when you get into trading, it's one thing, okay, here's what's going to happen in the market. You still have to manage your trades. I mean, that to me is the success of being a trader. All these people are trying to predict the markets with this or that or GAN or astrology or whatever it is. Doesn't matter. You're still in the trade. You have to figure out your entry, your exit, and the management of the trade. That's what makes trading successful. That's why I've been able to make a fortune trading, managing the trades. Like everybody, sometimes I'm right and wrong, but you have to be able to manage the winning trades and the losing trades. That's what makes a huge difference. That's what being a good trader about. There's no magic secret of this business of trading, other than money management and managing your own trades.
Yeah, and I would add discipline. I know on that one trading schedule that you showed earlier with the number of days left in June, you had $2,000 as the max loss, from what I recall, correct?
Right, absolutely.
So if you're wrong, there was a fellow that I used to do radio. He would come on our show from time to time, and he was a money manager for Wachovia, one of the better ones with Wachovia. Mm-hmm. And he always had a saying that, I don't mind being wrong. I just don't want to be wrong for long. And so I think that kind of speaks to that point, having your stops in play, knowing that you're not going to be right every time and accepting it. And I think, your son, who wrote a book about the mental aspect of trading and what makes a good trader. I mean, I'd probably love to have him on the show sometime and talk about that. But I think that's a big part of it, because our human psyche is that we want to be proven correct. And when you take a loss, you're basically admitting failure. But it saves you a lot of money in the long run.
Jason's work was really interesting. He was trained as a psychiatrist, Johns Hopkins, and he did the first serious work that researched just successful traders. In the past, these guys like my son researched losing traders. Well, Jason's work was on winning traders, and he found there's a couple of things all these winning traders had in common. And one of them is not quite what you would expect, but because I've seen so many traders blow up, it was very real to me. And is that most of these traders have, let's call it a low self-image. They're not yelling and shouting and screaming and all that type of stuff like you see in the movies. They're like, well, I don't know what's going to happen. I have a friend who manages billions of dollars, and if I ask him about the markets, well, I don't really know. I mean, he's like, and that's, I think, what makes them successful. Because of that, they're not plungers. Whereas the guys I know from the pit days where you're yelling and shouting and screaming and they knew everything about the markets, they were plungers. They all blew up. So yeah, what you reference is the safety of this, and again, managing your trades, is how you approach it. You've got to have the discipline to it. You have to say, well, I guess I'm wrong here, and get out of the trade. And you can be wrong. We have a friend that lived here in the Virgin Islands with us, was a floor trader in the Pacific Coast Stock Exchange. He said he'd have 600 or 700 trades a day, and he never knew which ones would be profitable. But if he managed his trades, he made money. I thought, wow, you never really know where your big winning trades are going to come from. You might have an idea, but you don't absolutely know for sure. So it's trade management and not being too impressed with your own intelligence or lack thereof. Those are big parts of it.
How did we're going to need to run on here or leave just a minute, but I did want to ask you, when you first got started in this, how did you learn? I mean, everybody has to learn from their mistakes. Did you journalize your trades? Did you go back and summarize, trying to figure out what worked and what didn't work? How did you get started in this?
Well, I had lots of opportunities. What didn't work, that's for sure, because I had a lot of what didn't work when I started trading. But I met two people that were really helpful to me. One is Gil Holler, who wrote a book called The Holler Theory. And Gil became a friend of mine. He was a very long-term, momentum-driven guy and just genuinely helpful. I don't know that I learned how to make money from Gil, but just the support that he gave me. And then a guy named Bill Meehan, who had been a member of the Board of Trade, came to me. A couple guys that now run, I think, the three largest commodity funds in the world were mentored by him. And Bill came to me and was looking for a job. And I said, yeah, sure, I'll hire you. You can help me, teach me about the markets. And Bill taught me about the commitment to trader reports, seasonality in the markets, premiums in the markets, spreads, the basics of the markets. And that was just really helpful. I had a good idea from technical stuff, reading Joe Granville's book and, knocking around with Pete Harlan and the McClellan oscillator guys and all that. We all were generating the same stuff back then. But to have that fundamental perspective from Bill Meehan was just massive to help me in the markets.
Very cool. Well, this has been a tremendous presentation. I can tell you I've really enjoyed it. I'm sure our audience has as well. We definitely want to get you back, Larry, sometime. So can we get that on your schedule?
Well, I absolutely look forward to it. I know we've always fun to do this. Come out from just looking at my own charts to talk to other people outside the world is wonderful. I enjoyed it very much. And thank you. You guys have been great today.
Thank you.
Well, before you go, a lot of people have asked, where they can get a hold of your latest and greatest information. Do you have a newsletter? Was the website up to date? Would you recommend?
Sure. The website is ireallytrade.com. And I do my weekly market commentary called Larry TV. So we show charts and talk about it and give the reasons why. It's not just enough to say, here's a trade. I really want to teach people and say, this is why I'm long bonds. Why I was long bonds a while ago, or why I'm going to do whatever I'm going to do. It's very educational. It's not just buy here, sell there. And I do that once a week. And there's courses and stuff there. And people can read about some of my students have done real well. We've got Traders Hall of Fame there. It's kind of interesting. They can read more about my Williams %R index as well, the history of it and stuff. So a lot of free stuff there.
That's another thing we didn't even have really a chance to get into, but I'd love to maybe on your next visit talk a little bit about how you developed that indicator. I know it's very similar to the fast stochastic, but you have different scaling on it, and maybe that's a topic for another a visit.
I would love to divulge the real story behind stochastics and %R next time. Absolutely.
All right. Well, we'd love to hear it for sure. So again, thank you so much for stopping by.
My pleasure. Good luck and good trading to everybody.
All right. Thanks, Larry.
Thank you.
Thank you.
All right. Well, it is.
Excellent guest. Oh. I've been excited about him coming on for a while, and it was a great presentation.
Yeah, and I want to say we probably had more questions for Larry than we've had for any guest on the show since we started doing Market Watchers Live. The questions were really rolling in. I do apologize if we didn't get to everyone's. We do unfortunately have a limited amount of time, but you heard it. Larry said he's going to come back, so we'll make sure we get questions answered in future sessions. And again, right there on your screen, you can see Larry's site, ireallytrade.com. Go in, check it out, and yeah, I mean, I think it's awesome. So great presentation.
Indeed. All right. Well, I've been trying to put together the 10 in 10. I don't have the RRG because I've just been glued to Larry's presentation. So we can skip that and go right on into the first symbol, which was ARQL, ARQL.
I have not even looked at this stock yet. So let's actually, let me get into the format I was using for the 10 in 10, and I'll pull it up and take a look at it. ARQL. Negative divergence bothers me a little bit, although look at the volume coming in on these breakouts. So price momentum is slowing, but the volume is not necessarily telling me that we got a problem here. So I think what I would do is maybe watch that 20-day moving average. Also this breakout that you can see going across here, just about 680 or so, the top from all the way back in July. And then again, these tops in April and early May, we finally broke through. The volume confirms. We test and we hold on the way back. And that price support now coincides with that 20-day moving average. So if you want to keep a tight stop, I think that 20-day and price support, which coincide pretty close to 6 3/4, that's an area that I would watch closely to the downside. If we do break below that area, I would maybe look for gap support and the 50-day moving average. You can see here when we gapped up on this heavy volume in April, we went back, filled the gap. So we don't have to go back down there. We have filled the gap. But that established price support right down near the 50-day. So if we lose 675, I think there's a increased chance maybe we'll go back to $6. But overall, this is a pretty nice looking chart, and I like the volume trend. So don't have a whole lot of negative to say here.
All right. Well, we have two most popular in the chat room, but it looks like AMD slid ahead of Amazon, but we'll go ahead and look at both of those. So we'll start with AMD.
Yeah, AMD has been a real winner among the semis. It is pulling back today after yesterday having the product announcements that it came out with. The stock really bucked the trend of selling in the semi space and in the overall market. Had a huge day yesterday. Seeing some profit taking today. We didn't make a breakout. We tested a key resistance area, but we didn't make the breakout. So I think that may have signaled this traders maybe to take a little bit of profit. But that's the high we saw in early April. We went right up to it, tested it, backed off of it. And given the overall market, it would have been unusual, I think, to see the market break out at that point. So I think AMD still looks really good. I don't have the relative strength charts up on this one, but I would just say, let's watch this trading range between 26 and close to 30. If we close below 26, knowing that semiconductors have been so weak, that might be reason to get out of the trade. But otherwise, I think you got one of the winners in the semi space. So I'm still a fan of AMD.
All righty. Let's see. Let's go ahead then and move on to Amazon, our other popular one.
All right. Amazon. I don't know why that didn't go on, but let's try this again. Oh, there we go. Okay, Amazon. The 800-pound gorilla that has become about a 700-pound gorilla here in May. Definitely lost a little weight. Volume picked up here on the selling down to the 50-day. I'd really like to see these recent lows hold. I mean, I think the stock overall is performing pretty well on a relative basis, given the overall market's been coming down. Broadline retailers have been coming down. Relative strength has deteriorated a bit, not anything horrible. So I'm still okay. I don't think it's not as nearly as strong as it was 8-10 months ago prior to all the selling that took place in the fourth quarter. As the group has bounced back, I mean, we've seen a little bit of relative strength in Amazon, but nothing like we had prior to the fourth quarter of last year. So a little bit of a mixed signal, mixed bag here, but I would just say watch the recent high and then this recent low. So I think for now, I would just maybe look at this as a area of trading range, 1800 up to about 1970 or so. And we're down near the lower end. I believe the market rallies. You'll see leadership from Amazon. But, another breakdown here, I'd be careful with the overall market so weak.
Okay. Let's see. Why don't we do Ulta? I don't think we've looked at that one lately.
Yeah, Ulta I was looking at earlier, and it was breaking down below these recent lows. Now, a solid finish today would be strong. This has been a pretty good stock in a good area. Specialty retailers have had a little bit of struggle here in May, but so has pretty much the entire market. We've lost a little bit of relative strength, but we haven't lost the relative support line that was established back in January. So I'm not really ready to give up on the group, and this is a pretty good stock within the group. So, if I was looking at Ulta, yes, there's definitely been a little bit of breach here of support. This is a key area. If we leave that long tail down to the downside at 321 and can come back up and close in the upper 320s or around 330, I think that would be a very bullish candle for Ulta. And I would be looking for it maybe to go back up and test this recent high closer to 360 or maybe close to 350, which is where we just were a week or so ago. But if we fail, then I think you got to look at the bottom of this gap support. Here was the huge volume gap up. And if we can't hold the top of gap support and we close below it, I think there's a good chance we go back down to about 312. And that's where I would be looking for a reversing candle.
Okay, let's see. Next one up, let's do TWST.
Yep, TWST. I think my internet's just a little bit slow. I apologize for that. Twist Bioscience. Well, you're in the biotechs, and look at the biotechs moving lower again. June and July, this is a great period of the year. We're not quite to June, but June and July tends to be very strong for biotech stocks. I would say looking at this individual chart, we got right up to resistance, and I think this is why it's so important. I know you probably think, well, why would I sell if my stock's going up like this? Well, because that's where all the selling came in last time. And so until you get through it, you anticipate that sellers are going to be there as well. So rather than watch it go down and say, oh, the sellers were there, I should have sold. Now let me sell $10 less, really want to try to, in my opinion, the way I like to trade is to try and anticipate those sellers and take the profit before you get that major test right up at $34. Having said all that, you can see we've got pretty good support down around 20. This is a wide trading range. I don't like the fact that the stock is rolling back over, but I do like the volume trends coming off the low. So mixed bag, but it's in a bad group. If the biotechs can start strengthening in June and July, like they historically do, then I think you might have something here with TWST, because clearly there's a lot of interest in the stock. I will say, though, outside of these really heavy volume days, some of these other days pretty light. Today, only 55,000 shares have traded. So you might get a little whipsaw manipulation. I mean, just in a 2-week period, this stock ran from 34 down to 20. So I think the volatility is pretty clear. So make sure you're okay with that.
All righty. Let's see. Next one up is Village Farms, VFF.
All right, VFF. I don't know why this thing is taking so long today.
Yeah.
I'm trying. Yeah, let me go to another page. Maybe it'll help. I'm sorry. So what was that last one you said?
No worries. It's VFF, Village Farms.
Right. VFF. Well, it looked to me like we had a nice breakout of a bullish wedge, and we are still holding on to that support. So I would just say here, off of an uptrend, that's when you start looking for these types of patterns. But you can see off of this move to the upside, we're pulling back, but it's like a squeezing piece of pie. But look at the volume accelerate on this move to the upside. When I get these breakouts of patterns, I like the volume to confirm. And that did lead to some additional gains. We're pulling back, but on lighter volume. I think the big support level is going to be where we gapped up. I think just below $12. We're at $12.59 right now. Closer we get to $12, the better I like this on a reward to risk basis. So that's why I'd keep an eye on.
Okay. Let's see. Next one up is going to be ETRN, and that is Equitrans.
Right.
Oil and gas.
Yeah, I don't know why this thing isn't going. All right, try it one more time. I'm sorry.
Oh, no problem. ETRN.
ETRN. Okay.
There we are.
Yeah, move up, pulling back. I just think we're consolidating. I would have liked to have seen more volume here. It was just kind of average volume when we're getting this breakout. That was a little, maybe a little bit of a warning sign. Why aren't there technical buyers coming in when you've got a breakout? We're pulling back though, so I would just maybe keep an eye on the support resistance area here. And yeah, right in there. So I'm going to say roughly 1970 up to about 2210 or so. I think that's the trading range. As we move back down, this is an area that I'd look for to see if we can hold.
All righty. Next one up is going to be corn, since we talked a little commodities earlier.
All right. I'm having difficulties. I tell you what, why don't we go ahead and just wrap up for now the 10 and 10. And you can, I'll take the other 3 requests and I'll do it after the show before they get posted into the blog. So you can come back and look at 3 others, but I'm not sure what's going on here with my internet, but it's taking forever. So
no worries. Yeah, the next one's just for people interested will be, I'll have them up in the Market Watchers live chart list, but that is corn. And then we'll look at BAH, and then we'll have Tom look at NSSC. So that is what we have for the 10 and 10. And I'm sure everybody's scurrying in the background to make sure we can get your charts working. I will have these up in the Market Watchers live chart list. Like I said, at the end of the program, just go to the articles tab, click on the Market Watchers live blog, and you will find the link right there at the top. All right, we will be back after this brief message.
Market direction is the single most important thing all investors need to know. Get the advice you need by joining dozens of elite money managers and financial experts, including Steve Forbes, Paul Merriman, Tom McClellan, and Keith Fitzgerald at the Money Show Seattle June 15th and 16th. You'll hear real-time market analysis and learn which stocks, bonds, funds, and commodities you should buy and sell to build a safer, more profitable portfolio. Claim your free pass at seattlemoneyshow.com.
Right, it is time for our final market update. Let's see what's going on. It's pretty ugly out there, guys, if you didn't already know, of course. Dow is down a little over 1%. S&P 500 is down a little, almost 33 points, about 0.78%. NASDAQ also falling fast. It is at minus 0.88% on the day so far. New York Stock Exchange in general, the entire market mostly there is down also 0.88%. Russell 2000 suffering as well, still making new intraday lows. TSX is following suit with the big gap down and continuing lower right now on the day. Treasury yields continue to fall, and we're looking at 2.215% right now. Volatility index, people are starting to get a little nervous out there. We had a reading of 19 earlier, but currently at 1888. UUP rising nicely on the day, up 5 cents to 26.41. Gold is also up today, 31 cents to 121.14 for GLD. USO is moving slowly lower here. It has actually broken down below last week's lows. It is actually down 2.75% right now and reading at 1190. TLT is up on the day. Looks like it's consolidating sideways, currently at 129.83. And of course, the sector summary. Let's see what we're looking at now. Materials actually is the one suffering the least today. The one that's really, the two suffering quite a bit, over 1% down right now, are energy and healthcare. And that's all I have for the final market update. I'm going to pass it back to you, Tom.
Yeah, and I'm just going to take a look at the NASDAQ and also the VXN, which is the, essentially it's the VIX, the volatility index for NASDAQ stocks. It's really for the NASDAQ 100, not just for the NASDAQ. But what I'm watching is, first of all, you can see the 20-day moving average on the NASDAQ's crossed below the 50. So we have a death cross. And you can also see these failures at the 20-day moving average. So from a daily perspective, there's really not a whole lot to like here. I mean, I'm trying to wait for some sort of reversing candle, some kind of sign that the buyers are back in the market. We're not seeing that yet. But I did want to point out, and this is the same with the VIX for the S&P 500, but even though we've moved to lower prices, normally lower prices mean rising volatility, but we've yet to see that. Now, we do have the VIX or the VXN here on the rise, but we have not cleared this prior high around 25, even though prices have moved down. And I suppose you can look at this one of two ways. You can say, well, the nervousness hasn't even picked up yet, and we've already broken down. So that's bad. I mean, we need to have capitulation. Or you can say, you know, you can look at it from a bullish perspective and say, well, we're at lower lows, but the market's not very nervous, which is a more of a bullish thing. The fact that the market isn't concerned about this latest breakdown. And when, you know, I was looking at some of the relative strength in the sectors, you know, seeing the defensive areas more down toward the bottom along with energy makes me wonder. I mean, you would think on a day like this, we're breaking down, the S&P's below 2,800. You'd think some of those high growth areas of the market would be you know, underperforming and moving faster to the downside, but that's not really the case. So I'm not quite sure what I'm saying, Erin. I just think that there's confusion right now in the market and the way it's acting. And so I think from a short-term perspective, though, you almost have to wait to see a little bit of strength before you can feel comfortable jumping in here.
I have to agree with you. Things are just really, well, and you could see it with the rise in the VIX. People are getting a little bit concerned.
Yep, no doubt. All right, well, it's time to get into our final segment, which is Turning Point. So for those of you who are new to this segment and to the show, Turning Point is just a segment where Erin and I look at stocks that we think could be at a critical juncture. Could be that it's been rising and we think it's at a key resistance. Maybe it rolls over, or we get the breakout, or on the opposite side, we could see many stocks falling and perhaps nearing some major support. So what do you have for today, Erin, for turning point?
All right. Yeah, I ran a scan. And I came up, actually, I did what the sifting scans move that I did yesterday when I demonstrated how I do that. And I came down to these 6 stocks that might be at a turning point. This one I like the Assurant. It's in life insurance. And what I like, you've got this nice rounded bottom here, a cup forming. It looks like maybe we're going to get that pullback a little bit, but look at the PMO, nice gentle rise. It's now hit positive territory, and the scooter, as far as relative strength, is looking good. I think OBV is behaving the way you would want it to. This is the important part that makes it at a turning point to me, though, is we have this 5,200-day EMA positive crossover, and that puts AIZ in a long-term trend model bullish configuration, or a long-term trend model buy signal. And so that gives you an idea that you're probably going to be on the proper side of the trade as long as we keep that going with the 50 above the 200. You certainly have a better chance of your trade working out. But I thought AIZ looked interesting. And the next one up I'm going to show you is Encore Capital. This is a lower volume stock, so you always need to be a little bit careful of that. I'm sure people are looking at this and saying, why in the world would you pick this, Erin? Everything about it is usually what you don't look for. But I'm looking at this, like I said, at a turning point. I don't know that it's going to make that move just yet, but what I'm seeing is, again, that 5,200-day EMA positive crossover moving into a bullish bias for the stock. And it looks like a pretty clear flag right now to me. So if we can get that breakout above 37 or even 36.50, I think this one could make a run, but it may take some more time, either consolidating sideways or maybe going down and testing that 20, possibly even the 50. It'll be up there. Watch the PMO. I think this one is near a turning point, and we could see a breakout to the upside, but this needs to resolve. We really do want to see that PMO moving lower, but I think this one could be interesting for a watch list. Asperion, notice a lot of some pretty interesting groups here. Healthcare is what we're looking at here for Asperion Therapeutics. Not the best day, granted. And again, you have that PMO turning over, but here's that 5,200-day EMA positive crossover. So again, we're moving into a place of a bullish bias. We had a difficult day today so far. Looks like we could come down and test that 200-day EMA before making that move to the upside. Again, watch your PMO. It's likely going to start sliding here as we move down. But hold on to it, because again, now that you've got that 5,200 crossover, I would be looking for possible support at that 200-day EMA, maybe even the 50 coming up. Grayscale Ethereum, ETCG. This one's a little on the volatile side as well, but look, and just in the long term, this very large cup shape. I think this one looks really interesting. The PMO is, of course, really in that overbought area, but we've only started tracking it. This is still somewhat of a new stock out there. Certainly, we made a nice move here of the 12.5%, but I'd look for that pullback. Again, there's that 5,200-day EMA positive crossover, some really nice volume coming in here in May, something to pay attention to there. And then Skyline was my last one. This one's got the flag formation. Now, of all of them that I'm showing you, I think this one has probably the best setup for right now or very soon. And that is because we have that rising PMO. It is decelerating somewhat, but that's on the formation of a flag. I think that this looks pretty textbook as far as that flag. It is a continuation pattern. You can see what could have been a longer term reverse head and shoulders as a head here, a left shoulder, right shoulder. And then of course the confirmation line would be broken here already with this formation of the flag. So I really like Skyline right now, not the chili restaurant. I don't know, are those still around? I've lived in Southern California so long, I don't remember. I haven't seen. But that is all I have. I'm going to pass it to you, Tom. What are you looking at as far as turning point stocks?
Okay, well, I've got a few. First of all, I mean, this was a pretty easy exercise to go through with the S&P 500. Just breaking down below 2,800. I see a lot of stocks that are teetering. And so I could go in a lot of different directions with this, but I went ahead and just wanted to look at some stocks that I think are on some very key areas of support. So I'm going to start with Newell Brands. And first of all, this is a stock's been downtrending. This is not the kind of stock that would get my attention. I don't like stocks that are downtrending. In 2019, when the S&P was been uptrending, you can see the huge volume here in February on the big breakdown, which really changed. I don't even know if it really had an uptrending character in its chart, but if it did, it certainly changed that with massive volume and the huge red candle. But if you look at the last 2 days, this stock's gone from 15, a little over 15, down to its current price of 13.44, which is just below the low that was established at the end of April. So if we could get a reversing candle here, maybe Newell is at a turning point. But if we break down, I think there's probably going to be more pain ahead for MWL. So that's something to watch. CLNE. Now, this one I think is very interesting because we had the gap up on heavy volume back in March, made a huge run. This stock ran on this gap up from about 225. A little over a week later, was up to 330. So we're talking about a 50% move in about 7 or 8 days. Now, we did kind of run out of some momentum to the upside. We fell back below the 50-day, but then we just recently had another huge gap up from 280. Stock got up to about 330, and it's worked its way back to this low right before we saw the recent gap up. So I think CLNE is at a very critical area here in the short term, because I think if this doesn't hold, if we go back down below today's low at 272, I think we're probably heading back into the 250s to test the upper end of this gap support. So I would say CLNE is at a turning point today. Domo, D-O-M-O, this is in the software space. We've talked about the stock multiple times. Great earnings report back in March. Huge rally to the upside. This tail intraday after gapping up, we sold off a little bit below 35. We held. We came back down just a little bit below 35, put in a piercing candle, reversing candle, back to the upside. Came down here to 34, essentially testing this level, rallied, and now here we are again, today's low at 34. But look at the volume coming out of the stock. I think that there's accumulation taking place in the stock. I think this is a really critical turning point here for DOMO. I think 34, 34 and a half is a nice area from a reward to risk standpoint. If money continues to rotate into software stocks, I would not be surprised to see a rally here. Just keep in mind, this is a stock probably going to be reporting earnings in the next couple of weeks, so keep an eye out for that. DQ, this is not at a turning point, but I just wanted to show you how important sometimes when you move higher, you come back down, establish lows, and then move higher. Look at this failure. We had an intraday high breaking out, but we didn't confirm it. Those things are turning points. That is the type of move that I would be certainly classifying as a turning point. Then we get down here to 30 at the end of March, taking out this prior low close, and we hold it, come back in, print a hammer, and look at what happens the next 3 or 4 days, back to the upside. So I just wanted to show you this stock, not because it's at a turning point, but because it has been at a turning point on multiple occasions here over the past few months, and this is what I'd be looking for on charts. FLNT, I think I mentioned this one as a setup a week or two ago. Stocks continue drifting lower, but I suspect that this $5 level is going to be critical. Big volume. We had gapped up above $6, sold all the way off to $5, rallied back, and now here we are back down testing this 5 level. Today, 505. I think Fluent is at a key turning point area. VRA, this is Vera Bradley, possibly breaking down or Is it going to rally and put in a bottom with a false breakdown? Turning point. Just a few more here. Oracle. How about the big gap down in Oracle back in March? We gapped down just above $51, rallied, and now today all the way back down to 51.05. Made a round trip. So this is not a hugely volatile stock, but we were up over 55 and pulled back to 51, holding the support level. This is a key area and a possible turning point. SND. Well, for those of you who really like to be bold, huge move and gap support at about 3.25. Right here, look at that volume coming in. It's taken a while. We printed a hammer a few days ago. Now we're getting potentially a bullish engulfing candle. This is definitely a key turning point for SND. If I was in the stock, I'd feel very uncomfortable losing 320 on a closing basis. So I'd really want to hold here. Alta, I mentioned this one earlier in the show. I mean, when I see a gap support, multiple tests of that support, and then I go below it intraday, and there's 2.5 hours left in the trading day, I think this is a turning point. I think either we're breaking down or we're going to establish a lower intraday low with a reversal, which I think could send us back higher. Alta's been a really strong part of that specialty retail group. So this is a type of stock that if I saw a reversal, I'd feel comfortable getting in on the long side. And then the last one I have is HDS, HD Supply Holdings. And again, I think when you look across or look all of these stocks I've mentioned, you've got many stocks that are just getting down to areas where we have seen support and or resistance. Here you can see it held it as resistance, pulled back. When we finally got through, that became support. We've held that once. The big problem I have with this stock is the volume that's been picking up on the selling as we move back down to 41. Close below 41, I'd be out. If it holds 41, maybe we have another shot here back to the 20-day moving average. We'll see, but I think HDS is at a turning point. And with that, we can summarize what we just went over for this final segment. So those were the individual stocks that we just went over and listed. They could become some solid trades, but I got to tell you, Erin, right now, this market's still making me a little nervous. I want to see some strength in the afternoon. I want to see what appears to be some institutional buying in the afternoon. I'm not seeing that just yet.
Yep, and I'll be writing my DP alert today after all of my indicators go final. But yeah, short-term indicators have just not been doing what you want to see them doing, and advanced declines, that sort of thing that Larry talked about. I'm on that as well.
Mm-hmm. Yeah, and when we look at the poll here, are we starting a bear market? I would answer no. I did not answer, but my answer would be no. I do not believe this is a bear market. I think we are in a secular bull market. Are we in a period of volatile action? Yes. But I would say no. What would you say?
I actually did say no at this point, which is kind of a surprise. But when we're talking bear market, I mean, that's like a 20+% decline. I just can't get behind that. I think we will pull back here. We'll correct, but I'm not looking for a 20% decline.
Okay, that's fair enough.
Yeah.
Yeah, I would just say that 20% seems pretty extreme to me for this level. I know that there's a lot of fear out there, and you've got a bunch of folks who are pointing to the trade wars. You're pointing to the bond market, the fact that the 10-year Treasury yield is dropping the way it is. I mean, I see all that, and I'm not going to disagree from a short-term perspective. But if I'm pulling up a longer-term chart, and I'll just pull up this last chart here, it's a weekly.
Mm-hmm.
I think if we get a reversal later this week and we can close back up over that 20-week moving average, I think that this is just a 20-week test potentially. So I think the S&P is at a turning point.
Mm-hmm. Yeah, I could see that. I could certainly see that.
Yep. I mean, pulling back, we kept saying, how can the market just keep going up week after week after week without a pullback? Well, we're getting the pullback. And then when you get the pullback, it's like, well, now it's a bear market.
Right. Don't want to throw, as you say, baby out with the bathwater.
Exactly. There's your upcoming schedule. A lot of great guests coming up. Want to thank all of you for being with us today. Special shout out to Larry Williams. That was a great presentation he gave us today. Look forward to having him back on the show. Please remember to complete the survey as you exit. We'd love to get your feedback. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Wednesday afternoon, everybody. See you back here tomorrow. Happy trading.